Hey guys, so given the volatility in the markets and obviously the downturn in Palantir, I wanted to analyze an article that came out on Seeking Alpha, which looks at a long-term price target of Palantir in 2030. And from the article and their analysis, there is a 5x from here. They believe Palantir will get to at least $140 billion market cap. Right now, it's at about a $25 billion market cap. And obviously, if the downturn continues, then the return could be much greater. And this is also a 20% compounded annual growth rate through 2030. So that is a pretty good investment. We don't know when the gains will come, which years, given the volatility. This year could be a rough one. But at the end of the day, it's important to zoom out, look at what Palantir does, why it makes sense to invest in them, or at least it's not investment advice, but it's definitely why I'm invested in them and why I continue to buy this dip. So let's get into the article, and I will also explain why I believe they are correct on this. So we see that they say Palantir stock was attractive at $20, and it is obviously then attractive at $13. Now, I totally agree with this. I started to buy Palantir at $22. So obviously my money where my mouth is, and I am continuing to buy now because it has been dipping. And to be honest, if it continues to dip because of macro events, that's just, to me, a buying opportunity. It says, meanwhile, Palantir's investment thesis has not changed, and much of its services are still in need. And I totally agree with this. And it's really, again, people have to zoom out and understand that if the macro environment continues to just dump growth stocks the way it is because inflation leads to the need of rising interest rates and quantitative tightening and all that, then everything that's unprofitable, and Palantir is kind of unprofitable still at the moment, and anything that has gone public in the last year or so is also kind of getting hit, then you have to realize it doesn't matter how good your future is, you're going to get hit, and that really brings opportunity to us at the moment. So Palantir's, the business hasn't changed, and if anything, we see them signing a ton of contracts, and this is why their story is still intact. So we go down and we see that, again, what has changed about Palantir, because whenever a stock crashes, that is what we're trying to look at. But it goes into here and basically talks about the macro environment, the bubble in growth stocks, because there kind of was one. So it's basically a compression of the valuations that were given. And obviously this is also due to the, like we discussed, rising inflation and all that. So no need to go in that further. The macro environment clearly having a negative effect on Palantir. But again, if you like Palantir, which I do, it's opportunity. So now it goes into what has not changed about Palantir. And this is, I think, just to reaffirm why individuals are invested in it, just reaffirm the story and blocking out all that noise of what's going on day to day. And it goes and talks about the U.S. government and commercial business is going more towards commercial. And I would say 100% we see this. We see that the commercial business is growing to, I would say, very soon potentially overtake the government side of the business. I think it was in Q3, it was 47% of the business was already commercial. And we have to remember that the commercial business is like, it's only a 5-year-old business, right? So it's kind of almost a startup. And the government business obviously goes back to 2003. And we kind of look, like how I look at it is that the government business was really what provided Palantir the ability to go through the research and development and create kind of the top technology that they have in data analytics. And then from there, now they're kind of expanding to the commercial sector. And ultimately, this is kind of where the TAM comes in, their total addressable market. And usually, like how it works is most important technology start off with the U.S. government and the U.S. Army using it, and then it implements into society afterwards. So I really think that this is kind of taking place, and that means that usually the U.S. government always has the best. So now we kind of see that happening. And it also talks about that the company, I mean, look, nothing changed, right? So the company still has now a $120 billion addressable market. And this is actually something they stated in their S1 filing. And the most incredible thing is this is also with excluding non-Western aligned countries or governments, because Palantir ultimately says that they will not work with these. So even with that, they have a $120 billion total addressable market, and this is really all a market that Palantir can penetrate within data analytics. So we move on. It talks about the management, and it really talks about like Alex Karp, that he's able to speak in French and go to the French government and French companies in France and discuss with them their ability to adopt Palantir and obviously what answers Palantir can give to their company needs and the government needs. And I think this is, so up until now, kind of this is what's been going on. Alex Karp really just, I think he travels all year round to pitch the sales of Palantir to different companies and governments. And I think right now, obviously, now that they're trying to really expand, it can't just be in one person's hands. So I think that's why they're expanding their sales team. And I would say that Alex Karp will still continue to go to like the most important companies, and definitely I would say governments, because ultimately governments are going to need to approve of Palantir kind of having the most sensitive data. Although obviously Palantir doesn't keep the data or own it, but at the end of the day, it's still processing through their system. So Alex Karp probably will continue to kind of meet these most important clients. And we see it says it has some of the top talent in the industry. And this is well known that Palantir has an excruciating process to become an engineer there because of their interview process and all that. So they really get the top talent, and how they keep them there is the stock-based compensation, which is obviously has been a topic for a while. But I think we're past that by understanding that in order to compete with Microsoft and Salesforce and these top companies, Google and all that, you're going to need to offer the employees the stock-based compensation, and really we want them to have that skin in the game when you're talking about a long-term investment. So we kind of have to understand what its valuation then is going forward. So it says, what is Palantir stock worth? So given that Palantir's total addressable market should grow by 20% per year, and this is up until 2030, and we think that the TAM will be at that point 600 billion, right? Right now it's 120 billion. And they think obviously Palantir is competitively positioned within its space and should therefore be able to, at a minimum, retain its current market share, proving a nice floor growth rate of 20% revenue, compounded average growth rate over that time span. And management, as we know, has guided for over 4 billion in 2025 because they guided for 30% growth rates up until 2025, which put them at, I think it's 4.3 billion. And honestly, I think that they're sandbagging their guidance a bit. Analysts believe it can get to 5 billion in 2025, and that implies a 35% growth rate. And if they continue this, given what they did in the past, it says they had a 47%, this says 2022, but it was 2020, so 35% is not crazy to think, and we should be around 40% in 2021. The earnings, we'll see kind of how it ends up there. Then they say going forward, if we can get a 25% revenue growth rate between 2026 and 2030, then we'll be at 15.4 billion by 2030. And given the $600 billion market, they would only need a 2.5% TAM in order to have the 15.4 billion revenue in 2030. And they say, look at Amazon, who currently owns 15% of their market, Uber 4%. This is something extremely doable. And I would say 100% in the sense of it being plausible that they would have a lot more than 2.5%, because first of all, the growth rates of 25% is coming off the typical growth rates of most companies that usually it kind of tapers as time goes on. But I think that Palantir is really at the beginning of its growth phase, because they're only they're just starting now to tap into the commercial sector. And right now they're only coming out with so many products that will be so much more meaningful going forward. Like their crypto for Foundry and even just becoming the operating system for many businesses. I think as they become the operating system, first of all, their actual data analytics get better. Like Google, like the more information that comes in, the smarter they get in providing answers. So I think it's the same for Palantir, and with different industries, the companies they choose, they'll get smarter by that. And I think it's an exponential growth rate. So as people understand that, wow, this company got an advantage from adopting Palantir as that operating system, I think more and more companies will opt in to use Palantir, and I don't see the competition. Like looking at Snowflake and Salesforce's Tableau and some other companies, they all, it seems like they all have their data analytics in the sense of they compartmentalize the data, they know how to visualize it properly and all that, but they don't actually give answers to the extent that Palantir does, because the way Palantir works is, like, for example, like as it said that they were able to find Osama bin Laden. It's like they're able to take all this different data that's from every like data source that they can get, and from there it's able to come to, okay, it's this percentage, 90 whatever percent, that Osama is going to be in this location on this date, given phone calls, just all these different things from so many different data points, including drone footage and everything like that, and it really provides companies and will with scenarios on how to act more efficiently and all that, as opposed to kind of just like compartmentalizing and visualizing it better and all that. It's like, again, it's AI that's doing all the work that they've been working on for so many years. So I think that the market to be only 2.5% for Palantir, I think, is going to be a lot more than that. But even at the 2.5%, they say that given the margins of Palantir, then they most likely will have by then a $140 billion market cap. And what I would say about the margin, something that I think could, like, again, very much surprise on the upside. Palantir has stated, and I want to kind of look at, they talk about the acquiring phase of a company, the expanding phase of a company, and then the scale. And this should kind of explain, first of all, answer when people say Palantir is a consulting company, no, it's not. It's a SaaS company. And also just how high the margins could get. So we see that in 2019, they generated 0.6 million in revenue from customers in the acquire phase, which yielded a contribution loss of 65 million. And then in the first half of 2020, those same customers generated 18.8 million. So from 0.6 to 18.8 million in revenue. And that yielded a contribution loss of only 13.9 million as opposed to the 65 million. So, I mean, we can see that, I mean, this is only in the acquire phase, but that jump in growth, and that's really going from the consulting to the kind of SaaS, is tremendous. And then you see in the expand phase that in 2019, we generated 176 million in revenue from customers in the expand phase, and with a contribution margin of minus 43%. And then again, in the first half of 2020, those same customers generated 160 million in revenue and a contribution margin of 35%. And so we see the margin go into positive. In the first half, they almost did what they did in the whole 2019. So we see the growth and we see that margin. And this is really, as we see, like from going from the consulting to that software as a service business model. And then we see in the scale phase, we see that in 2019, they generate 565 million revenue and they had a contribution margin of 55%. So already when they're in that scale phase, this is where kind of it's the SaaS model. Their contribution margin is 55%. So in the first half, they're at 296 million and their contribution margin is at 68%. So, I mean, their margins are only going higher as time goes on because we see that it goes from that consulting to the SaaS model, and only as their system gets more and more data in it and they expand throughout these different businesses, then it will only perform better and have a bigger reasoning for customers to get involved as using Palantir as their operating system. Thank you so much for watching. Please like and subscribe, and I will see you in the next video.